Hey there, everyone. Dave Keller here with Market Misbehavior, and I'm excited to be sharing with you today some new tools for dividend investors. Dividends are such an important part of the total return proposition for equity investors. We focus so much on absolute returns, on price appreciation, or what's called capital appreciation, right? You buy shares at a certain price and they appreciate and you sell them at a higher price. But the total return argument for investing in equities is that many stocks have a dividend component as well. And if you can get that sort of sweet combination of strong price performance and a healthy dividend component, you have a stock that is growing in a stable way in price action, but also able to pay out some of their earnings in the form of dividends, which can provide additional income on the side. Special thanks to our friends at Seeking Alpha, as always, for supporting the channel, for creating and designing great tools that we feel compelled to share with all of you and enjoy doing so for sure. So we're looking at Seeking Alpha here to look at some new tools for dividend investors, and particularly we're going to start with a test portfolio. To be clear, this is not a live portfolio. This is not a portfolio that I currently hold. This is just a sample portfolio to get us started. And you can get to your portfolios in the left column. If you don't have one, just hit create a portfolio. It's pretty easy to enter tickers. I just entered tickers and a cost basis or positions for each of these when I got started, but you can easily do so on your own. Now we're starting with the summary page, but what you want to look at are sort of these tabs just above the table of stocks. And I just have 10 stocks in here, a mix of different things to put it together. We're going to focus on this dividends column. What's great about the tool here on Seeking Alpha is that it rolls up the dividend payouts that you're expecting for individual stocks. We can see some stocks like a Netflix don't pay a dividend. So these are kind of just zeroed out when you go across the board. But you can see something like Caterpillar with a fairly consistent dividend has ratings in some of these different categories, which are basically ratings on their dividend safety, dividend growth, dividend yield, and dividend consistency. We can see when this is going to go ex-div, which is basically when you need to own the stock to get the quarterly dividend payment. And we can go to the right to see things about estimated annual income and yield and things like that. But what's really cool is this little section above the table, which actually summarizes for this group of stocks with the positions that I entered. Here's my estimated annual income just from the dividend portion of these investments. It's so easy to look at dividend yield on a particular stock, but I think what you really want to think about is reflect on a portfolio level. Where's your opportunity? We can see dividend growth for the entire portfolio over time. So again, rolling up some of that data to more of a macro, big picture sense for your portfolio can be really helpful. And by the way, we'll get to a couple other dividend tools here in a moment. Just to remind you, there are a bunch of other things that they allow you to do to analyze your portfolio in a little more detail. One of the things I noticed, and again, this is a sample portfolio, so not something I'm actually looking at, but I realized all 10 of the stocks that I have in my sample portfolio, their quant model built into Seeking Alpha, they're all rated neutral. So maybe I want to upgrade some of those ratings on the stocks. We can go to this ratings tab, by the way, and you can see the quantitative score, which is again based on the proprietary quantitative model built into the Seeking Alpha platform. And by the way, I did an interview with Stephen Kress, who runs the quantitative department at Seeking Alpha. I interviewed him on my podcast earlier this year. I'll remember to put a link in the description for you if you want to check out that interview. He talked a little bit more about his background and the mentality or the approach that he used, the strategy to develop the quant model could help you understand a little bit more about what those numbers might represent. But we can also compare what the quantitative score is showing relative to the Seeking Alpha analyst score, as well as the Wall Street analysts that are summarized there, as well as other components within their quantitative factor model. Now, let's say we want to add more dividend, maybe highly rated dividend paying companies. That's where you want to go to the stock screener, and this is the second tool I want to share with you. On the left column, there's a section called Stock Screener. If you go there, you find you have a number of pre-designed screens by Seeking Alpha. You are welcome to create your own. You just click on the link in the upper right. It's pretty straightforward, some great drop downs. They actually have some sliders where you can set things like market cap and ratings and stuff like that to make it pretty easy, and it'll dynamically filter out stocks that don't meet your criteria as you narrow things down to a workable list of stocks. But I often like to start with some of their pre-canned screens. Now, I'm sure you're glancing down at high dividend yield, and I'm sure you're tempted to think, ooh, stock's paying a heavy dividend. That's probably good. Here's what you got to remember. Now, I'm not talking about this screen in particular, but in general, remember when a stock pays a healthy dividend, and particularly a high dividend yield, what you have to remember is what the dividend yield actually represents is the dividend that you're getting, the dividend per share, divided by the share price. So let's say the dividend yield is like 5%, but let's say the stock gets cut in half. All of a sudden, the dividend yield is up to about 10%. That doesn't mean that the company is just an awesomer dividend payer after that point. It just means the price has been cut so much that you're getting more dividend, because the dividends, if they haven't changed and the dividends remain stable, price being cut in half means your dividend yield is twice as impressive. So that might not necessarily be a good thing, because that might imply that the price is going down, maybe for a reason you don't know about yet. So what I like about the high dividend yield stocks here is it combines it with the quant rating. So basically stocks with a yield above 6%. So the expected yield is over 6% of the share price for the course of the 12 months, estimated for the 12 months. But it also looks for stocks where the quant rating, the proprietary quant rating, is rating it a buy or a strong buy, which hopefully gets rid of some of the junk that's really struggling, because those would no longer look attractive to the quantitative model. It's a good initial sort of way of filtering out things that may have a good dividend, but the price may not be particularly attractive. I would also point you to this section, which is called Top Quant Dividend Stocks. These are stocks with a good quantitative rating, but also particularly in the areas of dividends, dividend safety, growth, yield, and consistently. Those were some of the columns that we saw back here when we were looking at dividends. So we can basically filter for stocks where the quantitative model is actually grading their dividend characteristics favorably. So only 7 stocks that come up on that scan right now. That might tell us something. But here we can look at some of the names. And again, not guarantee that we just want to blindly buy that list of stocks, but it could give us some ideas about some specific names to dig into a little bit further. Now, they also have some pre-canned groups when you go to the market data section. This is the third tool I wanted to share with you. So in the upper left, you'll see this section called market data. A lot of great just big picture information about earnings and ETF strategies, cryptocurrencies, et cetera, But one of the items that I actually made it a favorite, so it popped up to the top of the list, is called Dividend Aristocrats. Now look at what they're doing here. It says companies in the S&P 500. So we know these are stable, established companies if they're in the, essentially the S&P 500 large cap index. And these are S&P names that have increased their dividends for each of the last 25 consecutive years, or for at least 25 consecutive years. That is a fairly consistent dividend payer. So this isn't a company that's just paying a one-off dividend and it's just popping up on your radar. There's stability, right? There's consistency to the dividend payout. Because what you have to remember is when you're buying a stock and it has a dividend yield, you're just assuming that they're going to keep paying that dividend out consistently. That's not always a safe assumption, particularly now where we've got tariffs, we've got a lot of uncertainty. There certainly is a scenario where companies start dramatically changing their dividend, structures, right? And that's a very real risk here in 2025. So these are companies, no guarantee that they don't change their dividends tomorrow, but they've shown through bull and bear cycles, they've been able to pay out a fairly consistent dividend. I think that matters. They also have to have a market cap over $3 billion, which basically means you're filtering out some of the smaller names, and an average daily trading volume of at least $5 million. And again, most S&P 500 names are going to fit those criteria because they're big enough and are liquid enough that they would fit that criteria. So this is a good working list of what they call dividend aristocrats. These are companies that have paid consistent dividends over a period of time. All of these column headings, by the way, are sortable. So it's sorting in descending order with the biggest yielder, which right now is Franklin Resources, ticker BEN, all the way down to the lowest that still fits within this criteria. And also remember, you can sort it by quant rating, you can sort it by safety factors or other things to try to just refine that list and focus on particular names or areas of the market that you think could provide some good opportunity. By the way, if you want to learn more about that quantitative model, I point you to the podcast interview I did with Stephen Kress, but they just started publishing a performance chart where they show you, and in tabular format at the bottom, how the quant model has actually done over time. And when you're evaluating a quant model like this, you have to sort of come up with some way of doing it consistently. So what they're doing here is using equal weighted indexes across the board. They're doing the strong buy rated, so basically the top rated names by the quantitative model, the top rated names based on the Seeking Alpha analyst, the top rated names using Wall Street research, and then an equal weighted S&P 500 just as a base case. And you can see when you look at the bottom that the Seeking Alpha quant model has outperformed the S&P 500 using this methodology for each of the last 4 calendar years. Underperforming a little bit in 2025. This is a volatile, noisy period, so we'll see what happens through the course of this year. But overall, it's been a pretty impressive long-term record, and good just reinforces the benefits of focusing on good characteristics of consistent companies over time. Now, if you're just looking more for ideas, you're looking more for thematic plays, a couple things I would point you to. And again, if you want to sort of build out your portfolio or you're thinking outside of just dividend-based ideas, I would also point you to what they call comparisons. This is called their stock and fund comparison tool. It's found in the lower left there, by the way. And if you click on it, you'll find that you can immediately find themes. So things like airlines, AI stocks, aerospace and defense, cannabis names, casinos, cloud and storage. And again, not necessarily saying any or all of those are going to be particularly strong ideas at any given time, but it does give you an idea about where you can focus your attention, right? Where you can focus on thematic plays, things that you might hear about or read about. You just want to know which stocks and which structures are part of that. Let's look at one of these as an example. As aerospace and defense. This will give you some of the key names in that space, like General Electric, like Raytheon, like Boeing. And what's really cool, this is a hidden feature that I just found here. There's a pop-up there, sorry, but if you click on the stock, look at this. There's this little link that says Analyze with AI. You click, and about a half a second later, it gives you like a 1 or 2 page summary, all driven by their AI engine, which just summarizes the stock. If you're looking for a bunch of random ideas, you find some random things, you can jot down the tickers or take some of these, print them out, put them in a, save them in a file somewhere, and then just review them when you have more time. What I've actually done is copy the URL, put them on a list, and then go back to review them later. But it's a really nice feature that they've recently added. So those are some of the dividend tools that I found on Seeking Alpha. A number of these are new, like the dividend roll-up for a portfolio I found to be a really effective way of really aggregating the dividend portion of your portfolios and just helping you make a more informed decision about where you might identify some potential weaknesses where you want to upgrade dividends or upgrade dividend stability. If you're interested in some of those tools, you want to be a Seeking Alpha premium member, and using my link at marketmisbehavior.com/Seeking Alpha, we can give you a special deal. They actually have a spring sale going on right now, and it runs from April 27th through the end of May 11th. You can get the premium offer for a little lower than normal. You can get a 7-day free trial, and also they're going to throw in the next alpha pick for free. Their quantitative team, run by Stephen Kress, actually uses their quant model. They hand select names that they want to feature as an alpha pick. That's a separate premium portion of the Seeking Alpha website. If you sign up now and check out their premium memberships, they'll throw in the next alpha pick for free. You can find all the information you need at marketmisbehavior.com/Seeking Alpha. I hope you enjoyed some of these dividend features on the Seeking Alpha website. Encouraged and interested to know what other tools and techniques you use to find top performing dividend names. Make sure you drop a comment and let me know. And a special thanks, as always, to my friends at Seeking Alpha for supporting the channel and supporting this video. For Market Misbehavior, I'm Dave Keller. Have a great one, and remember, it's always a good time to own good charts.